He's probably gonna boil it and turn it into bone broth. Greg, can you hear me?
I can. Can you hear me?
Can't hear you. Hold on.
You can't hear me? How's that? Better?
Okay, now I can hear you.
There you go.
Let me get my other camera up here. Get the good camera up, if I can. I cannot. Let me just try something here, guys. I got the wrong camera up. If we can't get it, we're going to have to deal with it. Bear with me 1 second. Sorry about this, guys. How are you all doing today? Matt, you in the office or you at home?
I'm good. I've got to make sure, since we're not live yet, are we?
Yeah, you are live. So just like a heads up.
All right. Well, then we'll talk afterwards. Business. You and I got business to share. So.
Oh, gotcha. Okay. All right. Well, for some reason, my good camera isn't working on me here, boys.
You're at home, Greg?
I am.
You look healthy and happy. You wish you were back in Hawaii, or are you glad to be back in Chicago?
Well, I'm here. I'm here. Where is he? Oh, there he is.
You got Cat in there.
You got Buddy there?
Yeah, there he is.
Is he
He's
passed out
happy.
on the floor? Did you give him some doggy downers?
Well, we gotta. He's got a little dementia, so we're.
He's
we've
old.
been. He wanders around all night, like digging through closets and stuff. So we've been giving him some CBD.
Which
I don't know whether it's working or not, but he seems happy.
Throw a little THC in there for the fun part, okay? Come on.
No. I've been down that road with the dog before this one. During prom, apparently, she got into some brownies that were, and that was a bad scene and expensive.
Yeah, I bet you had to take him to the hospital.
Yeah, oh yeah.
Almost there. All right, well, everybody, welcome to This Week in Lumber. Let me get my. There we go. How's that? Now I can look at this since my other camera isn't working. With Matt Beamer from Hampton Lumber Sales, Greg Riley from Sitka USA, where we break down what has happened last week in lumber and try to make a go of what we see in the market, but crazy volatility with everything going on. This is like a real Elon volatility market, isn't it?
This is a free speech zone, okay?
Yes. So exactly. So one thing I want to talk about on the lumber side, let's just real quick. What I want to do today, talk a little bit about the market, then jump into housing because everybody most people are long a house or rent, so it affects them. And we'll break down a few of the KPIs going on there, and then we'll talk a little bit about. Greg had a good point. Home builders came out with earnings. We'll chat about that, logistics, and then what we see moving forward. So, kind of a little introduction to the market this week. SPF, we'll get that into logistics also. So the SPF market is still tight. Talk to some people that still have cars. I don't know if this is true or not, that they bought that were supposed to ship a month ago that they still haven't had. I'm talking on like 2x6 cars to Iowa and a few other places. Southern Yellow Pine, from what I can see, what I see on the MX platform, everybody that went long pine last week is now trying to sell it and get out of it. So the pine market seems to have has at least for the time being feels like it doesn't have any more bite to it. It just from what I'm seeing and what I'm hearing from the people that trade it. And the OSB market seems to still be pretty solid after it sold off numbers, but Southern Yellow Pine, plywood, OSB seems to be finding a trading range to get at. Does Matt and Greg, does that make sense with the world you guys live in, what I just said there or not?
I mean, I don't trade yellow pine, so I was a little surprised to hear you say that. But I can tell you when it comes to whitewood and the western species, the Doug fir and the hem fir and the spruce, it's been pretty electric around here. And even today, we're still fairly busy. So who knows what that means? The logistics to the first point that you brought up at the very beginning, the rail situation hasn't gotten better at all. Okay. So it doesn't matter if it's Western Canada or Eastern Canada. I think the railroads are jammed up, period. It doesn't matter if it's the CN or the CP or the UP. If you're talking about the major railroads in North America aren't performing very efficiently, and there's a lot of log jams in the systems that they don't seem to be able to clear very well. So that hasn't gotten much better. I'll give an example. I bought a dozen cars of West Fraser prompt 2 weeks ago. Prompt, haven't shipped. Not one of those cars is shipped. So what does prompt mean anymore, right? It doesn't really mean anything. The trucking side of things is a little different. Trucking's starting to get a little bit better. We're finding more truckers available to haul freight, and especially like on the long haul stuff, is the freights have come down to more like normal historical type ranges. So I'm encouraged to see that. I wish we could solve the rail problems, but that doesn't seem to be a priority for the railroads, honestly.
Are mills, let's just real quick, are they finding out, can they ship some of this to border point reloads and load it on trucks and ship it instead of waiting in cars to show up? Matt?
What I'm doing on stuff that I can buy locally let's say I can buy lumber within 300 miles or 200 miles of Portland. There's such a problem with the BN out here in Oregon and Washington that the UP has now been impacted by it, right? So 2 months ago, nobody could get a BN car, and so everybody switched to UP. Now the UP is slow. But we have our own reload, and we can bring in UP and BN cars here in Portland. It's where we load all of our mill cars. So Warrenton and Tillamook have to truck their stuff up to Portland to load it.
Okay.
And I'm just using that reload because we have our own fleet of cars, so I can kind of solve my own problem internally by just trucking it up to Portland and then shipping it out of our own facility. But if we didn't have that ability, I don't know what I'd be doing right now. I mean, I'd just be waiting for cars to load like everybody else.
Yeah, for sure. Greg, what about you? Had a good conversation. We had a good one this morning. You said a lot of the Eastern mills are trying to ship trucks in Canada. Obviously, that's not the biggest market, but they're moving trucks in Canada to move stuff off. But I think are they still having a few issues shipping out of Canada on cars in the East, Greg?
Yeah, I mean, I guess first I just want to give a shout out to all the people that participated in my LinkedIn poll of a couple of weeks ago. And, I just want to say how impressed I was with the 60% of the respondents that to the question was, will the market bottom in the next 2 weeks? And 60%, actually 77% said yes. And of that, 17% were expecting the market to go back to the old highs, and 60% were expecting it to bounce and move sideways. So, so far those 60% are right on, and that's impressive. As I try and fine tune the polls to be, predictive in nature, and I guess one of the things that I always think about, Ash, is, the markets move the most when reality is different than everyone's expectation of what reality is going to be. I've been posing this question to everybody that I talked to this week is, where did the cars go? I find it hard to believe, it's like one of those things that there's something doesn't make sense how mills can be getting 30 to 40% of their cars consistently week in and week out. Oh yeah, but there are some mills that are getting all the cars they need. But yeah, listen, at 4-digit numbers, there's the incentive for every mill to ship as much product as they can because it's record profitability. The other question that I ask is if all the mills, if everyone was caught up on shipping, what would the market price be?
Well, Greg, I saw. Is it in their best incentive to catch up on all the shipments? I'm just asking that question, right? I mean,
Well,
hey, they have a lot of money tied up in inventory. So I mean,
if that's true, I ran truck freights from like Quesnel, Chetwynd, Castlegar, Houston, BC to Chicago is $7,000 for a truck right now. This is from a broker. Atlanta's $13,000 in a truck from Quesnel to Atlanta. Chetwynd, $6,600 to Chicago from there to Atlanta, $13,000. So it would cost a lot more, but if you wanted to, you could load those on trucks and move them out and get them across the border. It would cost you money, right? But at $1,000 a thousand, it would cost you $100 a thousand to actually clear your order file. So my question is there an incentive to actually clear order files right now, or is that helping keeping price up on spruce?
Well, for sure, it helps keep the price up. Whenever you constrict supply, you're gonna create some space in the market for the distributors to make a little bit of a margin, and the import wood that comes in all of a sudden looks a little bit more palatable, and wood that's closer to the market that you can physically move around. This is the whole thing this is what's affected us for the entire year is logistics, really. We've been talking about this for a long time.
It's actually, I got some really good information. I was looking for production numbers, and our friend Russ Taylor, who we've had on, and, I told Russ, we're going to get him on here in the next couple of weeks. But, he gave, I was saying, what's the production number so far this year? And there's a 3-month lag before we get the numbers. But he brought up a great point is that, and I wanted to make sure I give him credit for this. This is his work, not mine. In 2021, U.S. consumption was only up 1.5%.
Give me that.
U.S. production was only up 0.7%. The balance on that was made up by increased Canadian imports and increased offshore imports. So, in the point being is that with that record price run that we had, and all of that was, supply chain inventory accumulation, and not to do with a substantial imbalance between end use consumption and production, right? It'll be interesting to see. I mean, the only number we have so far is for production is that January was down 6.3% from last year, with Canada being down 9.5%, US being down 2.8%. 1 month doesn't tell you anything, but it'll be interesting when we see those first quarter numbers, because I am going to anticipate that first quarter production is going to be lower, which is what's led us to these prices. So my real question is, they always say is everyone always fights the last war, instead of, and each war is different, right? So,
right.
As I look forward and saying, hey, what's going to be different in May, June, July, August, September?
Let's so anyway, back to your whole thing on the cars. It sounds somebody put on Twitter today some of the car situations getting better.
You're on Twitter. You're on Twitter.
Yeah, 2x47, man. 2x47 at 2x47. So my question is this: it seems to be the way
I thought you were 6'3".
The way that producers were handling this in the past. So look at, there's a big OSB mill in Western Canada shut down in October. I was having a conversation because they couldn't ship enough, right? So it seems like people are and we hear of the Western Canadians actually curtailing stuff because they can't ship it, right? So instead of that's been the response, Greg, and maybe that's the right response, or I don't know, but does that make sense? Curtailing at $1,000 a thousand to handle a freight situation?
Well, I mean, listen, we all know that BC lumber production. We had Kip on a few months ago, and we know that they're going to continue to make less and less of it. I mean, the area of the country where production's growing the most is in the southern U.S. 2 billion board feet of production that's come on already and projected to come on over the next 12 months, and you can see it in the difference in the pricing. I'll tell you that this week already. I've had a handful of multifamily jobs. It's SPF, Southern Yellow Pine, or Doug Fir, and they're all going yellow pine because that's the price that's most competitive.
Right. Gotcha. So somebody's got a question up here. Are we going to, and I heard this from a couple people. So Greg, you're into the Euro stuff. Are we going to see a slowdown from Euro shipments to the U.S. due to the Russian fiber embargo?
So that's a great question, and I've had a couple of conversations about it. And my read is it appears like it's going to affect some boards and specialty products and millwork, but it's not going to have a substantive impact on commodity dimension lumber. That's what my my sense is so far. And the other side of that is that European economy is probably going to slow quicker than ours, which would make additional volumes available to the U.S. market to the extent that there's vessel and port space. I did get a notice today of a new shipping line that is adding vessel space starting next month to U.S. ports, Baltimore, Savannah, Canaveral, Lake Charles.
Because the hubbub going out there by people that sell Euro to people that buy Euro, they're telling them there's going to be less commodity coming over. And what you're saying is, in your opinion, you don't see that. You see as much coming over as there's coming over now.
Haven't seen any slowdown yet, that's for sure.
So, Patrick, I hope that answers your question. Greg's been trading that Euro for a long time. Matt, you trade that stuff too every now and then. It seems to be.
Yeah, I'm more of a dabbler.
I've heard that.
Isn't dabbing a dance that the kids used to do on TikTok about a year ago that's not trendy anymore?
I think that was Cam Newton. It was more like 10 years ago, dude.
Okay.
You're getting old.
I'm only 9 years off, man. So let's talk a little bit about housing and break these numbers down. Because, Greg, you really were – so houses under construction are continuing to grow. With that said, you were saying that statistic is a little misleading because – or completions, right? What was the one?
I did have a LinkedIn exchange, not a Twitter exchange. I'm waiting. I'm waiting till the algorithm doesn't block me as much as it has. So I'm optimistic that I'll be able to start trending a little better over there. But so new home sales came out for March yesterday, and they were down 8.6% from February, fourth monthly decline. They're down 12.6% from March of last year. And I mean, if you look at the chart of home sales, they peaked on January of last year. That led to an increase in inventory of 6.4 months. And, that was where our friend Kyle Little asked me that, how is that so when people report that there's nothing available? And I said, yeah, that's misleading in that 6.4 per month supply is vastly made up of houses that are under construction or not yet started. So, therein lies that whole conundrum between, how can starts and permits be 1,700,000, 1,800,000, and completions run 1.2 to 1.3, and that's what's got us at a record number of houses under construction and a record number of houses authorized but not started. So those are both those two items are both really positives, right? I mean, it tells you about how much there is in the pipeline, and that gonna need product.
No doubt. I mean, it feels that way. So instead of was talking the other day, instead of 50 people bidding on a house, maybe there's only 20 now.
Yeah. Then the other number that came out was home prices up 19.8% year over year. And there's markets that prices are up 60% from a year ago. Phoenix, Tampa are, two that come to mind.
Well, let's jump in then. Let's talk about.
My question to you was, are 20% year over year increases on average and 50 or 60%, are those sustainable?
No.
I love it when you can hit a softball.
Yeah, no, I don't think so. I mean, I guess is 6% sustainable year over year for a long time?
Well, 8% inflation, you'd hope so.
Yeah, you would hope so. So let's talk a little bit about home builder earnings. You dug into that a little bit. What came out? What did they talk about? What's the feeling there?
Well, so like Horton came out, and I mean, I guess the biggest numbers were that, I mean, their earnings were up huge. Their new orders were down 10%. But they focused on the same numbers in terms of, hey, how many houses do I have? The number of houses that they have sold going forward. And I'm saying it was like 20-something thousand. I didn't pull it up right in front of me, but and we've gotten similar numbers from the other home builders, in the story's all the same.
Gotcha. Matt, what any feeling on the home builders out there?
Oh, they're for sure going to slow down, right? I mean, they wanted to hit the ground running hard this year, and they did. They've done that. They've accomplished their goal. We've got another 2.5 months of them kind of just going like with their hair on fire to get as many starts going as possible. And then the headwinds of what the Fed is trying to do are actually going to hit everybody, right? And this is why a week or two ago, I said to Greg, I'm starting to turn into a mega bear. And, I am. I'm point blank. I don't like the future of the lumber business as we go forward into 2022. The one little thing that gives me a glimmer of hope about the remainder of the back half of 2022 is that I don't think anyone's going to invest in really a lot of inventory at these levels, right? I mean, it takes forever to get the wood that you want to buy. I mean, rail shipments are still a problem. So just instead of taking 5 weeks to get the wood, it takes 10 weeks, Well, you're talking about guessing about a quarter out. You want to guess what the market's going to be in 2.5, 3 months and try to run a distribution model that way? I don't think most distributors are going to go along with that. And so they're going to keep inventories lean. They're going to be very disciplined on their purchasing. I don't think the retailers have any incentive to go build a bunch of inventory going into the hottest part of the year. So we could have a market that's sort of stuck between slower consumption, but really low inventories too, right? Where you just get a sideways market. You get a market that everybody thinks should be going down 200, 300 points, but it's not. And nobody knows why. Well, the reason why is because nobody really has any inventory. And we've seen the market has been selling off here for the last 3, 4, 5 weeks. And then it makes a $200 rebound like in 5 days, right? And that's all because of low inventories.
Yeah, no doubt. So Matt and Greg, maybe this is a question to you guys. Stuff that is shipping late, is contracts? So you have contract wood and you got spot purchase wood, right? are the contracts getting out on time? And is it the spot wood is that takes the beating, that's the one they flex around to ship? Does that make sense? So if I'm a retail yard and I'm 50% contract and I got 2x4 number 3 bought Matt on contract, am I getting my shipments before Matt Beamer that bought the prompt shipping cars, or is that everybody?
I don't think so. I don't think anyone's getting preferential treatment. All that, they might have. Maybe if you squeak loud enough, they'll give you a little extra attention.
Yeah. My only reason for that question is would we see, if that's the case, would you see more contract business for instead of people trying to speculate on building stuff? They're like, screw it, I just want the contract business. Would you see more of that?
The contracts that I have been shipping whatever they ship.
I got you.
And
okay.
It doesn't matter if it's like I've got Canadian contracts and I've got U.S. contracts, and it doesn't matter.
That makes sense.
They're all late, and they're all just doing the best they can to keep up with the flow of empty rail cars. And that's the biggest problem right now.
Yeah, and like you were saying, that flow is all the way from the production level down to that crew sitting down in Houston or Austin or San Antonio trying to pull those cars in, right? It's all over the place.
I just assume that everything's late for everybody, and I haven't been wrong yet. So
yeah. Somebody asked a question here. I don't know anything about the LVL market. It says, when do you see the LVL supply catching up? The only thing I can say is when there's more producers of it. I don't know. I don't know the answer to that.
Well, I mean, my thought is that as we move into June, July, and all of the major builders have reduced their new starts and focus on closings for their year ends in September, October, that a lot of the other non-commodity lumber supply chain issues will have a chance to catch up. I mean, ultimately, all of the stuff that needs to catch up on supply chain, it's not going to get answered by increasing supply as much as it is by and it doesn't need to be a big downturn in demand. Like a marginal setback would make it things much easier for everybody. And it's also to Matt's point, he's 100% correct. Is if I look at the marketplace, I see end users with maybe adequate inventory and no incentive to increase it substantially, but not really the opportunity to reduce it either. And that's going to prevent the market from having a substantive fall from here, or probably a substantive rally, with my caveat being some unknown that changes what everyone's viewpoint of reality is going to be.
That's a great point. But the world that you and Matt live in, where you take risk, put it on the ground, either hedge it or buy undervalued, that if that continues like that, that still leaves some good opportunity for both of you, correct?
Matt and I are both mill salespeople at this point. I don't want to speak for you.
Honestly, Ashley,
I'm a mill salesperson right now.
When I look at the risk, so I look at, let's just use the futures board as our guide here, right?
Yeah.
And
people hate when you do that.
I can't sell a premium in the board.
Right.
So I can't really hedge. It's not a great hedging opportunity right now if I want to go buy some inventory and then hedge it.
So you can't buy at 1,070 and sell 920 and make money.
As you know, Greg, it's hard to do. So that is telling you.
Can't you make that up in volume though?
I've
Honestly,
tried that before. It doesn't work.
Yeah, that reminds me of 2018. Let's not go there.
Sorry.
Yeah. Make a bunch of money in the first half of the year, then give it all back in the second half of the year. That was great. Right now there isn't really an angle. The best thing that you can do is just mind your business and manage your inventory, intelligently, and make modest and well thought out bets on your positions, right? But I mean, I'm talking small ball, man. If you're hitting singles and doubles, great, that's fine. Right now, that's about all you really want to do. I don't think there's any home runs to be hit in the May contract or the July contract or the September contract. Unless you know something that we don't know, and you know that demand's going to be real frothy, this summer and fall, then you'd go out and buy that, and you probably got $300 in it, right? So I don't think that's likely either. I think that the mills are going to have a lot of incentive to keep producing at a high level at these prices. The mill's production goes up as we get into the year. So by the time you get to the third quarter, that's peak production. At about the same time that, all this 5% and 6% interest rates is really having an effect on the consumer. So hey, you figure it out. But to me, it's pretty obvious. Just be careful, right? Just like if you were a raging bull on January 1st, maybe you should slow your jets on June 1st, right?
Yeah, there's a lot of unknowns out there. I mean, we come in, we're wondering, people want the Fed to raise what was our friend Kramer saying, that they should come out over the weekend and raise it X amount of points and just catch up to everything? I mean, what's your feeling on here, Greg? What's going to happen?
Well, I mean, that was, Westbury came out with that, an article like 3 weeks ago that said they should just increase it 2.5% and then say, we're done for the next 6 months and we'll wait to see what happens. Increasing it to 2.5% or 3% with 8% inflation, it's still negative real return. So, I mean, there's just so much work that has to get done. And the one thing we do know is when you go into Fed tightening cycles, what they do is they ultimately expose where the problem is. And we never really know what it is until they get into it. And then something blows up and we go, oh shit. And then you just hope that it doesn't turn into a black swan. But I mean, every prior Fed tightening cycle, it's exposed some excess that's there. I mean, free money creates excesses.
And that's where
Can you explain the black swan thing that you just talked about? Because I don't 100% understand that, but I'm interested.
What color are swans?
Yeah, no, I understand white.
So a black swan is something that's really, really, really rare. And so it's like it's way out a far tail that the odds of a black swan being there are really low.
Right.
So
swans are white.
With what the Fed is doing, mistakes were made, others will be blamed. But with what they're doing, how does that expose housing? I mean, when you read the general information we're all pushed to digest, it says the Fed is trying to aggressively slow down housing. Are they? And is that possible? And do you guys feel that way?
Well,
I mean, they can, sure.
I mean, one of the ways that you see it, Ash, is in the spread between the 10-year and mortgage rates. Okay. Right? So, the long-term mortgage rates are 1 to 1.5% above the 10-year. And right now they're 2.5% above the 10-year. So, and why is that? Well, part of it is because the Fed in quantitative easing was buying mortgage-backed securities, and they drove that spread down so low. You think of all the people that were refinancing at 2.5% and 2.75%, right?
Right.
But they ended up, I think the number was they had like 65 or 70% of all the mortgage securities are owned by the Fed, and they're rolling them off now. And that's putting upward pressure on mortgage rates and the spread between the 10-year.
I know I've read some of this. I don't know what the statistics
and that's, are. As opposed to Westbury, who tells things that are really concise. I kind of ramble on with my explanations.
Yeah,
that's why he makes the big bucks.
So refis, cash out refis, and probably have dried up to zero, right?
Yeah, mortgage applications are way down.
Yeah. Less than zero.
Yeah.
But I did see the ad that Tom Selleck's pushing for reverse mortgages.
Yeah, you're about the right age for that, Greg. You're getting up there. Silver
Ouch.
sneakers.
Ouch. That I thought we were friends.
We are friends. Look at my face. It's white, okay? I can tease you because I'm old also.
Oh.
I have no hair and I'm teasing you, okay? Come on.
I know. There's nothing but love, baby. Nothing but love.
That's right. Yeah, no. You know, when you're both sinking on the Titanic at the same time, there's a lot of love there, baby. A lot of love.
Oh yeah, no doubt. So look at, we kind of wrap it up. The market, a lot of people out there in our lumber industry, where I see on social media and everything, just went through 2 years of a absolute, and can I say, one of the best markets we've ever seen in the 2 years. If you weren't in the market the last 2 years, you missed the best market in lumber trading historic ever, right?
Right.
But now we're sitting here wondering, and Matt, you made the comment, the good times could be over. These times, but things will still be decent. In fact, maybe it'll be a little bit more. What do you guys see it being April? You know, when we look back on this at the end of the year, how are we going to think that is this going to be a tale of two different halves of a year? H1 was pretty good, and H2 was not so good. Or is it still too early to tell? And there's a lot of things that could happen between now and then.
Yes, and yes.
Yeah, I mean, I think we're going to have a really good year in sum total. And I'm not, when I say I'm turning into a bear, I'm a charts and graphs guy, and I'm looking at charts and graphs. And I'm not really a mega bear like consumption is going to go to zero. No, not really. I just think that the price of lumber is going to deflate as the year goes on. There'll be a little bit more supply, a little bit less demand, and that usually equals lower prices. I mean, that's really that simple.
Yeah.
However, I will say that I think we're going to have a lot of liquidity throughout the whole year. The retail lumber buyer still needs to stay with his customers, and I don't think Horton and Lennar and KB and all the other builders out there are just going to stop building all of a sudden. You know, they got a lot of stuff to do still here for the rest of the year. The extended ship time business, so that would be Greg's talks about the multifamily segment of the market, I think is going to be white hot, especially if we do get prices below 1,000, on a consistent basis. I think that brings them in quite a bit. There's a lot of work pending this summer on apartments and hotels and infrastructure. I don't think that's going to change at all. I think there's going to be more of that. So whatever we lose in terms of the froth on the top of the single family housing market, we can more than make up for on the multifamily side. The industrials are going to remain really strong. And then your home center business, it will perk back up. That part of the market is pretty price sensitive. We've learned that the last 2 years. When the price of a sheet OSB goes to $70, the consumer just says, yeah, whatever. I'm going to go watch a Knicks game instead,
You don't need they're
not in the playoffs.
Whatever, they just got something better to do besides build a fence with a, $15 fence boards. They just, we'll just put it off till the fall.
Yeah, that's a good point. I don't want to go out and buy another sheet or 2x4 to lean in my garage again, right? at that kind of price. I lost my train of thought here. I was going to ask you guys. Greg, you made a comment about being a mill sales guy. Look, this has been a great 2 years for the mills, and they deserve it because they went through some horrible markets for a decade, basically.
And think about like mills. Go ahead. I'm sorry.
And they had to deal with that. So God bless them for having some great markets to be able to put some meat back on the bones. Now you're seeing some mills talking about some stock buybacks. And it's a good thing for them, and I'm glad they were able to finally, reap some of the benefits of the money that they put in to keep running these facilities and have, human beings that they employed. It's good to see that. And Matt, you live in that world, and you've been through both sides of it. It's certainly it feels good, and it's a good thing for mills to actually have this happening to them.
Yeah,
and look for more consolidation.
Mills probably made more money in the last 2 years than they did the prior 20 years combined. And it's created, a level of consolidation. I think, most, if not all of the mills that have been bought up in the 0809 financial crisis by private equity are, either have been sold or are going to be sold. And that they don't know what to do with the money now. And so the only thing left is to buy back stock. Right.
Good point. Yeah, that's a good point. Well, listen, guys, if you want to get a hold of Matt's at Hampton Lumber Sales, Greg Riley, Sitka USA. There's Matt's email, Matt Beamer at Hampton Lumber Sales, Greg Riley, Greg at Sitka Inc.com, and you can come to mxlumber.com if you want to sign on free to be on the only digital B2B lumber exchange that's creating transparency and matches every day in lumber, OSB, and plywood. So, guys, I really appreciate you guys taking 40 minutes out of your day today to do this. And we're live tomorrow with Matt Lehman and then Friday with Mike Wisniewski on our Friday Smart Market. So everybody have a great day, and we'll talk to you soon.
Yeah, take care.
Thanks, guys.
Thanks, guys.
Good to see you.